there's no doubt we're also expecting another robust quarter of numbers from Alibaba, particularly as these pandemic cases start to reaccelerate in China. We're seeing more e-commerce demand broadly. Do you have to look through these short-term numbers and have to wonder what the extent of the regulatory enforcement, the regulatory, aftermath is going to be after these investigations and these reforms in China take place?
Well, I think as you look at Alibaba specifically and you look at their performance, certainly based on the numbers that we're looking at and the tracking we're doing of the company, they're expected to have a very solid performance for this quarter. And we also think for 2021, obviously, as the shift continues to accelerate between offline to online consumption, we think that trend's just going to continue. I think the pandemic is helping that. I think consumers are more willing to accept buying things like staples, like fast-moving consumer goods or groceries online, whereas maybe 2 years ago that was something that they were not doing. And we think that that's just going to be a continued trend. And I think actually the pandemic will continue to support Alibaba's growth into 2021 and even into 2022 as consumers' behavior shifts and pricing becomes a motivator for them in terms of their purchase decisions.
There is the anti-monopoly investigation, right? And we know that Beijing has made antitrust, anti-monopolistic behavior one of their top policy priorities. What does that mean for Alibaba? Are they too big to fail? Or is this something that investors will have to take into account? Because there is talk about, a potential penalty of 10% on revenue. We just don't know what that potentially looks like.
Yeah, of course, we're going to be watching that very closely. And I think that right now, Alibaba is the largest and will continue to be the largest e-commerce platform in China. And we don't see that changing. Obviously, there are competitors that are continuing to grow very strongly, Pinduoduo, and you have JD.com, and then you have others that are coming up as well on the periphery. So I think that that's good for Alibaba. I think it helps to distribute the market share. It helps to demonstrate that they are not as big a monopoly as others may say they are, and that dynamic in the marketplace will continue to move around in terms of market share as consumption changes between these platforms based on the consumers' preferences. Obviously, it is a wait and see with respect to regulatory enforcement. It's not something we're going to predict, but what we will watch is how the performance of Alibaba may shift. But right now, it's looking very strong, and it looks like they're in a great position for this year.
And compared to other tech giants like Tencent or JD.com, for example, this GTV chart on the Bloomberg showing that Alibaba stock is still cheap compared to other stocks valuations. Given that these regulations seem to be targeted more broadly to the broad internet ecosystem in China, does it make sense to assume that perhaps given Alibaba's strength, that if you have these regulations broadly, they'll be able to actually deal with them better?
Yeah, from the way we see things with Alibaba, obviously looking at the fundamentals of the business, clearly you can see by stock valuation and just based on revenue growth that this is a company that's very healthy. They're growing very well. They're going to continue to grow in the coming years. And so to us, this is a very attractive business and one that as an alpha investor, if you're looking for good, solid businesses, this would be a good place to be looking at. And that's something that, we feel very strongly that Alibaba is in a great position going forward. And I think there's other companies in the e-commerce space too. Like I said, this is a growing pie. Consumption is moving online, and there's a lot of opportunities for these e-commerce players to take advantage of that consumer trend.
And Joseph, of course, we're headed towards that Kuaishou IPO this week as well. How closely are you watching this, and how interesting does this sound? I mean, we are seeing lots of demand in the gray market already.
Yeah, this is a very interesting company. I think this is another example of this peripheral e-commerce player now moving into the e-commerce space between short video, live streaming, and e-commerce promotion and e-commerce spending. And so this is a great little company, not so little, a great company, and one that we are tracking and will be advising our clients on prior to the IPO. And I think it's just another example of the innovation coming out of China and how to monetize consumer behavior. And I think there's more of these types of unique opportunities in China going forward.